Thank you guys so much for tuning into today's live stream. It is June 10th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So for Tuesday this week, we don't necessarily have anything that's too impactful. We have small business index. This is just the sentiment between small businesses, and it's essentially a survey of small businesses which asks respondents to rate their relative level of economic conditions during including labor markets, inventories and sales, capital spending, inflation, earnings and wages, and credit markets. It's better than previous and higher than forecasted, so it is good. And this could be due to the Tax Cut Jobs Act. That could benefit small businesses, right? But yeah, we don't really have much impactful news coming into today. For the technicals, at least. Well, to start it off, let's take a look at the monthly time frame. And that red line is the monthly candle from last month. And with the way that we closed, easiest assumption that we could make is that we were going to attack the monthly high, right? The monthly candle is an up close candle. And the easiest assumption that you could make is that we're probably going to take out the monthly high. And so after we take out the monthly high here on NQ, I don't have an objective anymore on the monthly time frame, right? If we begin to pull back into the monthly range, whatever we want to do, if we continue to expand, that isn't really a concern of mine, right? So after the monthly time frame has been completed, or after the monthly objective has been completed, what's next for me is I'm going to pivot onto the weekly time frame. And with the way that we closed last week on the weekly candle, the easy assumption is the weekly high, right? Simply based off of the way that we closed, and that the weekly candle closure last week was closer to the weekly high than the weekly low. And so I think it was coming into the Asian session yesterday where we expanded towards the weekly high. And I'll go more into depth about I guess why I wanted to see the weekly high get targeted and how I treated that as the higher time frame objective for the setup of mine. And yeah, so that's us completing the weekly objective. And so going from the weekly objective, right, because we have already completed the weekly objective, I have to pivot once again. So I have now pivoted from the monthly onto the weekly, now onto the daily. And that red line is indicating the daily candle from yesterday. And with the way that we closed yesterday, I honestly didn't have an objective, right? It had a pretty unclear closure due to the fact that, the candle basically closed right in the middle of it. And so it's uncertain. I can't tell if we're going to attack the week or the daily high or the daily low. And so I, coming into today, can't and I'm not going to rely on the daily time frame, right? But we did take out the daily high and the weekly high, as mentioned during the Asian session. And so coming into the morning today specifically, the time frames that I'm going to utilize are going to be the 4-hour time frame and the 8-hour time frame. So depending on how those two time frames close, that will give me my morning objective. That will give me a reason for if we want to see higher prices, which would be for us to take out the 4-hour high, or will we close bearish and suggest that we are going to take out the 4-hour low. That's all dependent on how we close on the 4-hour time frame and the 8-hour time frame. And yeah, so that's kind of what my ideal is coming into the morning. Like I said, I'm pretty much pivoting. I'm pivoting from, you know, the week, or I'm pivoting from the monthly onto the weekly, onto the daily, onto the intraday time frames, right? I'm not too focused on one time frame. I'm allowing different time frames to do its thing, and I'm utilizing the fractal nature of time frames here. So ES, we have also taken out previous day high. And let's see if we've taken out previous day low here. It looks like we did take out previous day low on ES. So there is a SMT divergence right now. So NQ, we haven't taken out previous day low, whereas ES we have. So there is SMTs. There is an SMT here at the highs, or I'm sorry, at the lows. No SMTs at the highs. But yeah, that's pretty much all I have for the morning session. For the morning objective right now, like I said, I'm gonna be utilizing the 4-hour time frame and the 8-hour time frame. Kind of interesting that, you know, I was targeting that previous week's high. We took out the daily high here coming into the AM session, and then during the Asian session we just began to, you know, we had this like expansion higher towards the weekly high, and then pretty much a reversal, kind of, not a reversal but more of like a retracement. But yeah, kind of, this is kind of where I am now. You know, I'm not really trying to force anything. Not gonna force anything here on the time frames. And for the time being, until the 4-hour candle closure, I am going to decide to go onto the pros and cons. All right, so this is wait, that was not the pros and cons. This is the pros and cons. So the pros and cons coming into this week, or I guess some of the pros and cons from last week that I'm going to carry over onto this week, is first just maintaining a level of consistency on the way that I approach, right? So the very first thing that I do before even pressing the button is I look for a higher time frame objective. A higher time frame objective is essentially the bigger reason for why we should continue in a specific direction, right? Are we targeting a higher time frame low, or are we targeting a higher time frame high? And or could we be retracing back into discount or premium of a dealing range? That's all pretty much what is a higher time frame objective. I'll be going over a trade that I took yesterday live on stream, and I'll explain to you guys more into depth of what a higher time frame objective is and how an example of a higher time frame objective. But yeah, that's the first component. The second component is a model. A model is a time frame lower, relatively lower compared to the higher time frame objective, and it basically allows me to be aligned with the higher time frame order flow. So if the 4-hour candle is suggesting lower prices, so my model would probably be on like on the hourly time frame, and the hourly time frame model should also be suggesting lower prices. And yeah, so that's my model. My model is a way for me to align myself with the higher time frame order flow. And last component would be a entry pattern. Entry pattern is always going to be a fair value gap in my case. That's just my preferred entry pattern. You know, you can use order blocks, you can use breaker blocks, you can use mitigation blocks, you can use whatever blocks that ICT has introduced, but my entry pattern is always going to be a fair value gap. And so yeah, those are going to be the three components that I always look for and identify before pressing the button. Requiring those three things allows me to be consistent, right? Second, knowing when to pivot. So like coming into today, that would be a pretty good example of knowing when to pivot, because the monthly time frames objective has been completed, because the weekly and the dailies objective has been completed. I am not going to stay on those time frames, right? I'm not going to utilize those time frames. I'm going to utilize possibly the intraday time frames, or some time frames like those, because I understand that every single time frame has an objective, right? Prices is fractal. There's this quote that ICT stated that really kind of like, it really, I guess, opened my eyes on how time frames work and stuff like that. But essentially it's, if you're able to view a 4-hour candle as a daily candle, then you'll be presented with a lot more opportunities, and that's completely true, right? If you can see a 4-hour candle, if you can treat the 4-hour candle just like the daily candle, then a whole new world's gonna be opened up to you, because like what you're doing is essentially targeting. What I'm actually doing is essentially targeting the low or the high of a candle, and every single candle has a high and a low, right? And so if I know that, then I can utilize different time frames, like the 4-hour time frame. Every single candle on the 4-hour time frame has a high and a low. You're literally anticipating whether or not prices should take out the 4-hour low or the 4-hour high. It's a simple approach, right? And the last, I guess, pro from last week that I'm going to carry on is to utilize SMT as a confluence before a trade. What I mean by that is there are going to be times where NQ and ES do not have any SMTs, right? Like the fact that ES and NQ, they do not have SMTs here at the highs, suggests to me that this high here is not going to be the all-time high. It's not going to stay intact. And yeah, so utilize SMT. If there's a lack of SMT, what you want to get from that is that there's a possibility of a continuation. But if there is SMT, then you might want to consider a possible reversal, right? Strong swing highs and strong swing lows will always be accompanied with SMT. And if you know that high is not going to be a target because it's a strong swing high because of SMT, then you don't want to use that high as a target. It's going to, I want to say demotivate you, but it's going to for sure make you not want to take, or might not want to consider that setup just because of SMT. And yeah, so use SMT to your advantage if you're in a trade. And let's just say, for example, for me, I'm in a trade here on NQ and I'm targeting a 15-minute high. If that same 15-minute high on ES has been taken out on ES, but NQ hasn't taken out that 15-minute high yet, then I'm going to move my stops to break even because there's SMT. Like I said, because of the presence of SMT, then I'll consider not taking anything or moving stops to break even to prevent any unnecessary losses. And so yeah, so that's gonna be all three of the pros here: consistency, knowing when to pivot, and SMT. What I should continue to work on, this is more numbers wise, I guess, but to make sure that every single one of my setups have at least a 1-to-1 risk to reward. Majority of the time it's going to be like a 1.1 to 1.5, 1.25 to 1. So I'm risking $1 I'm risking $1 to make $1.25. And yeah, so just understand that every single one of my setups should meet the requirements of at least a 1-to-1. Second is your maximum dollar loss limit is $100. So my stop loss will always be around like 100, right? If it's like a daily model, then I'll increase it up to 200 as a loss limit, but that's kind of where I'm at. And the day margin requirements. So this is kind of what Tradeovate requires for you to be able to actually take a trade. For one contract in MNQ, micros NQ, you are required to have at least $100 in your account to meet the margin requirements. So for example, if you're in a trade with 5 contracts, your remaining account balance should and must exceed $500 just in order to meet that margin requirement. And this is just for like liquidation purposes and to prevent any like massive losses. And the fees for actually executing a trade here would be $1.12, somewhere around there. And yeah, so to really wrap things up, continue to take consistent trades, right? Require a higher time frame objective, a model, and an entry pattern before every single one of my setups. I have to be able to identify those 3 things before even executing. Second, understand when to pivot timeframes. So, like I said, coming to today, I'm gonna want to pivot because because the fact that I can't utilize the daily, the weekly, and the monthly kind of gives me like, it kind of forces me to pivot onto the lower time frames, which I'm happy that, which I'm I don't really mind doing. Utilize the fractal nature of the markets. Second, pay close attention to, or third, pay close attention to SMT. And last but not least, follow my risk to reward rules, track my progress. So I do have now a completely new journal for my 10K trading account. And I'll go over this as soon as I finish these improvements. But yeah, so I want to track my progress. Preferably, I want to have a recording of every single one of my executions. Yesterday, the execution was on my live stream. It's a daily model, so I didn't want to really record for that long. But yeah, as long as it's like in recording, then it's fine. But it's going to be on the live stream from yesterday if you guys want to check it out and kind of see what the thought process was during a trade. You'll see where whenever I was in the trade and I wasn't excited, I wasn't frustrated at, you're simply just pressing a button. Whether it works out or it doesn't work out, it's not really up to your control. You're just playing with the probability, right? And yeah, so that's pretty much all for today. Give me 1 second, I'm gonna get some water, but keep in mind that the 4-hour candle closure is about to close in 1 minute. It's looking like the way that we're closing on the 4-hour time frame is pretty much uncertain. I can't base a bias off of the way that we are closing on the 4-hour time frame, because you can't really tell if it's going to take out the 4-hour high or the 4-hour low. Same thing here on this hourly candle. It's not very certain. It's you can't tell if we are going to take out the 4-hour high or the 4-hour low. And yeah, give me 1 second and I'll be right back. Okay, so to kind of do a recap of yesterday's, setup, I do want to record this, so I'm going to start recording. Alright, thank you guys so much for tuning into today's video. Today I'll be recapping the very first setup here for the month of June. The very first trade here. And to dive right in, the first thing that I do want to mention for this trade is that it is based off of the weekly higher time frame objective, and the way that I aligned myself with the bullish weekly order flow is on the daily time frame, and my entry pattern is on the 10-hour fair value gap. So the first thing that I want to explain is the higher time frame objective of this setup. So with the way that we closed here on this weekly candle, you can kind of see that the closure is where my mouse is, and the close of last week's candle was like visibly closer to the weekly high than it is to the weekly low. So that the way that I interpret this information is that within the very next weekly candle, we should take out that weekly high. I don't know exactly what the day and what the time we should take out the weekly high, but that's going to be my objective. And so now that I have an understanding that I'm bullish, right? I'm going to be bullish on the weekly order flow. I go onto the daily time frame and I notice that, okay, well, this daily candle here on Friday, it's pretty bullish, right? The daily candle suggests the same idea. Apply the same concepts of what I just did on the weekly time frame, but on the daily time frame. So you'll notice here that the daily candle closure on Friday, the closure is closer to the daily high than it is to the daily low. And not only that, but like it's a pretty bullish closure, right? You can kind of tell that within the next daily candle, we should take out the daily high. And so, knowing that, I have my higher time frame objective and I have my model. So those are the two components out of the three that I require. And the only thing that's left is to find a fair value gap on the lower time frames respective to the daily time frame that supports the bullish order flow both on the daily time frame and the weekly time frame. And so you'll notice here that there is a 10-hour fair value gap, and this 10-hour fair value gap is a busy buy side imbalance, sell side inefficiency, and it's a fair value gap that should be respected to continue higher. It's a bullish fair value gap. And you know, there are times where ICT mentions, oh hey, this fair value gap should be respected. Oh, this fair value gap shouldn't be respected. The way that I know which fair value gap should be respected is based on the model and the higher time frame objective. So it's kind of like a domino effect where one has an influence on another. So in this case, the weekly has influence on the daily has influence on the 10-hour, and they're all kind of working together here. So imagine the weekly, the daily, and the 10-hour as like a set of gears where, you know, in order for like a bike to rotate and work efficiently, they have to be all kind of like, they can't be going against each other. The gears can't be rotating in opposite directions, and if they do, then it's just gonna get stuck. So that's kind of what I'm doing here. That's kind of what the concept behind utilizing these three time frames, right? And one thing that I do want to mention is that notice how the daily high is different than the weekly high. To me, this means that once we complete the daily objective, there's a bigger reason why we should continue to expand. So like, imagine there's a really big magnet at the weekly high and there's a smaller magnet at the daily high. So the smaller magnet is going to be drawing you towards that smaller magnet, but overall, the weekly time frame, there is that bigger magnet that wants to pull you towards that thing, and that's kind of the concepts behind that. And so let's go into the 1 hour time frame just to show you a little bit more. into depth of what prices look like. So here you can notice that there is that 10-hour fair value gap. There's a gap between the first candle's high and the third candle's low. That creates that fair value gap. And yeah, so there is this illustration where I drew an open, low, high, and you can see that in the illustration we're targeting the previous day high, and we're drawing just means we're going towards the weekly high. And yeah, so once prices dips back into this 10-hour fair value gap, I take my entry, and this is pretty much what it looked like. We opened up here at the weekly open. I am buying below the open, and as you guys can see, here we are. So we're slowly kind of like inside the 10-hour fair value gap during the Asian and London session. But as we get onto the New York AM session, we expanded towards the daily high. We take out the daily high, and this is where I actually I took off profits here. And there are two reasons for this. Well, first is that I only had one contract going into this setup. It was a daily. It was based on the daily time frame, so the ranges are a little bit larger. And if I had 5 contracts, it would have gone against my risk to reward kind of setup. So only one contract going to this setup. I took off that one contract once we took out previous day high. And I also noticed that NQ, we had taken out previous day high here at this specific moment, but on ES we didn't. So because there was SMT between NQ and ES at previous day high, that's kind of another confluence on why I decided to just take profits there. And that's pretty much all for the setup. The only thing left is the kind of the risk to reward things here. Oh, give me 1 second. Someone's.
Hey, good morning. My name is Kenny Parker.
Scam calls. Sorry. So the risk to reward details here. So overall, the risk to reward was a 1 to 1.12. So essentially, from the entry point to the previous day high was a 1 to 1.12, which basically means I'm risking $1 to make $1.12 at the daily high. But overall targets was the weekly high, right? Which was a 1 to 1.75, which is essentially you're risking $1 to basically make $2. And total risk here and total reward was 178 to 199 at the daily high. I'm sure if I were to move the targets up to the weekly high, this would have been a little bit different. The total number of ticks, or I guess you would say points here in this case. The total number of points that I was able to capture was it's ticks, was 399, and number of contracts 1. Net profit of this entire setup was 187 and 18 cents, and that's the total account balance right now. But yeah, so that's kind of all I have for the very first trade that I took of the month of June, and even to begin this, I guess, 10K journey. Yeah, that's gonna be all for the video. Hopefully that gives you a little bit more insight of what occurred during the very first trade for me. And yeah, thank you guys so much for tuning in, and until next video, be safe. All right. And so back to the stream. Hopefully that was able to give you guys a better insight of how I viewed prices, right? The setup was pretty clean. Kind of unfortunate that I wasn't able to be a part of the move when we take out the weekly high, but that's completely fine, right? That was my objective coming into this week, and I don't really mind just, sitting on the sidelines and watching. That's completely fine. There will be times where you're given an opportunity. There will be times where you're not going to be given an opportunity. Yeah, so that's going to be pretty much it for today's live stream. I went over the pros and cons. One thing I do want to leave you guys with here is, for the remaining of the morning session going into the afternoon session, I would say utilize different time frames. Really understand the fractal nature of the markets, right? If you can't utilize the 4-hour time frame, then wait for maybe the 6-hour candle to close, or you could go onto the 1-hour time frame, the 30-minute time frame, or the 15-minute time frame. 15-minute is the lowest I'll go, but utilize all those time frames, right? Wait for the candle to close, and if it's a clear, if it's a candle that closes pretty clear that it wants to take out the high, then try to structure out a setup. If you can't, then don't force anything. But yeah.